In this video, we're going to take a look at why silver is such a popular market around the world and what drives the price day to day. Hello, I'm David Jones from Capital.com, and this is the latest in our series of videos looking at popular markets with traders, what they are, what makes them move, and why traders like them. In this one, we're going to take a look at silver. It's often seen as a poor relation to gold, but it's still a popular market with plenty of traders. So let's get started. Let's take a look at what makes up silver and why traders like to trade it. So let's take a look at what is the silver price and what makes it such a popular market. It's not quite as popular as gold when it comes to precious metals, but it still appeals to many traders. Supply and demand has a big impact here. Silver is widely used in various electronics industries due to its greater conductivity. So if we saw a slowdown there, that is something that's going to have an impact on the price of silver. But like gold, it's also used by investors as a hedge against inflation. So if prices in the wider economy are rising, traditionally silver should start to rise too. And also, like gold, it's used as a safe destination for cash in times of market turmoil. For example, a prolonged sell-off in stock markets, you would expect silver, like gold, to be rising. But it could also be viewed as just another currency because it is traditionally quoted in US dollars. If we have a stronger US dollar, the price of silver will fall, and a weaker US dollar usually means the silver price will rise. So how do you trade silver with Capital.com? You trade contracts for difference, CFDs, on the silver price. And you trade using leverage. What leverage means? A small amount of money can control a much bigger financial position. And that's popular with traders because they're typically looking for short-term price moves. And using leverage will magnify their potential profits. But of course, that does magnify the potential loss if you're wrong. So it's very important to use risk control measures such as stop losses. And when trading CFDs, you can trade markets in both directions. So if you think the price of silver is going to go up, you'd go long, you'd buy. And if you thought the price of silver was going to drop, you can sell short. So you can position yourself to profit from a slide in the price of silver. So let's just take a quick look at the market just to see the sort of moves we've seen over the last 12 months. So that the price of silver has traded above about $17 an ounce back in June 2018, but then slipped to trade below $14 by November 2018. We've seen a bounce back since then, and it's this sort of volatility that traders like. You know, it's one of these markets, it's seldom a dull market, it does move around, and that's what appeals to traders. So the factors affecting silver in many cases are similar to that of gold, although silver does arguably have more industrial usage. And it's this sort of volatility that makes it a popular market with traders around the world. You can trade it with Capital.com using contracts for difference, CFDs, and of course that way if you think the price of silver is going to fall, you can sell short, or if you think there's a recovery coming, you can buy and go long. With CFDs, as I said, you're using leverage, so you're getting in effect more bang for your buck, you're magnifying your profits, but hand in hand with that goes the risks of increasing your losses. So it's incredibly important to use risk management techniques such as stop losses. You can find out more about trading using contracts for difference, CFDs, on the Capital.com website. That's it for our quick introduction to silver, so we'll leave things there. From me, David Jones, and Capital.com, good luck with your trading.